Hey everyone, welcome to your Algo Lab. In today's session, we'll give you a quick recap of the most anticipated earnings releases. We'll also take a closer look at individual companies and their peers within the same sector. Without further ado, let's dive in. GE Aerospace, a division of General Electric, focuses on manufacturing jet engines, aerospace systems and services for commercial and military aircraft. GE Aerospace stock has gained attention as the company shifted focus to its aerospace business after spinning off its other divisions. GE Aerospace benefits from strong demand for air travel, engine maintenance and defense contracts, which drive revenue growth. However, the stock can be influenced by factors such as global air travel trends, supply chain disruptions and defense spending. Investors often view GE Aerospace as a key player in the aviation industry, with growth potential in both commercial and defense sectors. In Q3 2024, GE Aerospace reported earnings per share of $1.15, in line with the consensus estimate of $1.14. The company's earnings were driven by its commercial engines segment, where a higher mix of high-margin aftermarket services and parts boosted profitability. This trend is expected to continue into Q4, though engine deliveries may be disrupted by the ongoing Boeing strike. Commercial engine margins increased by 180 basis points to 25.7%, thanks to more high-margin spare parts and extensive repair work. However, defense operating margins dropped by 240 basis points due to a less favorable engine mix and inflationary pressures, despite price improvements. The Boeing strike will significantly affect the commercial engine business, as the 737 MAX accounts for over half of LEAP engine deliveries. Although new engines typically lower margins, they help absorb overhead costs, meaning profitability could decline despite the stronger mix of high-margin CFM engine spares. Next, let's evaluate how GE Aerospace has performed relative to its peers in the aerospace and defense sector. This sector tends to be less correlated with the broader market, as factors like government spending, technological innovation, and commercial aviation demand play a more significant role. We have also compiled key financial metrics for GE Aerospace and its peers. The analysis includes two sections, quality and valuation. In the quality section, we consider metrics such as revenue growth, net profit margin, free cash flow margin, debt-to-equity ratio, and current ratio, with higher composite quality scores being preferable. In the valuation section, lower values indicate a more attractive valuation. Verizon Communications is a major US telecommunications provider offering wireless, internet, and digital services. Its performance is driven by factors like subscriber growth, 5G network expansion, and competition from rivals such as AT&T and T-Mobile, while also facing challenges from high infrastructure costs and a competitive industry landscape. In Q3 2024, Verizon reported earnings per share of $1.19, aligning with the consensus estimate of $1.18. The company's revenue for the quarter remained flat compared to the previous year at $33.3 billion, largely due to a $173 million shortfall in low-margin equipment sales, driven by a 10% decline in device upgrades. Verizon also missed expectations on several key metrics. Total postpaid net additions came in at 349,000, below the consensus of 585,000. Consumer postpaid net adds were 68,000 versus an expected 275,000, though postpaid phone additions reached 239,000, surpassing the 222,000 forecast. Despite this, Verizon maintained its wireless service revenue growth guidance at 2%-3.5% and expects to reach the higher end of this range by year-end, implying a 1.6% increase in Q4 at the midpoint. Its 3Q prepaid net adds, excluding SafeLink, were 80,000, showing stabilization in a segment that contributes to postpaid growth. Verizon also raised its fixed wireless access subscriber target to 9 million by 2028, up from the previous goal of 5 million by 2025, as growth continues to outperform expectations. Now, let's assess Verizon's performance relative to its peers in the integrated telecommunications services sector. This sector is typically defensive and less sensitive to broader market movements, but during market rallies, it often lags behind the overall market. We have also compiled key financial metrics for Verizon and its peers. The analysis includes two sections, quality and valuation. In the quality section, we consider metrics such as revenue growth, net profit margin, free cash flow margin, debt to equity ratio, and current ratio, with higher composite quality scores being preferable. In the valuation section, lower values indicate a more attractive valuation. On this channel, we share tested strategies for investing and trading, covering everything from technical analysis and fundamentals to economic trends and sentiment-based algorithms. If you don't want to miss out on any of our content, be sure to like, subscribe, and hit the bell icon to stay in the loop. Thanks for watching, and I'll see you in the next video.